Welcome back to the Loner Ranger Radio Show. I am the Loner Ranger. My name is Bruce Woodburn, CrossCountry Mortgage, and we were talking in the last segment about the disadvantages that the millennials and Gen X's have over a previous generation and the lack of wealth that they've built, but how they made it up in the last 3 years by investing in the stock market and investing in real estate. So my motivation is to help more young folks invest in real estate. So I have an amazing guest with me today that I truly love very, very much, and I'm very, very proud of him, and that is my son, Chase Woodburn. Welcome to the show, Chase.
Hi, thanks for having me. I'm super excited.
You're very welcome. So the reason I wanted you on the show is because you had graduated from college when? When did you graduate from college?
May 2020.
May of 2020.
Yeah, so last year.
And then when you got out of school, you got a job, and you got a job here as an entry-level employee.
Yes, yeah, right? I was doing marketing stuff. I was working on your team, and actually that was when we started doing the Loner Ranger, everything. We got all the brands set up for you. So
Yep. Everything was set up for the Loner Ranger radio show then, and we did the big K92 launch and all that. But you really had learned a little bit about the mortgage business from osmosis, but you didn't really have any experience. You were getting licensed at that time, I think, even as well.
Correct,
right?
Yeah.
And not really doing mortgages, but more doing the marketing aspect, helping me with my builders and so forth.
Exactly, yeah. That was what I was doing for years.
And then you decided that there was something that triggered you to say, hey, look, I don't want to rent, I want to buy a home, right? What was your inspiration for that?
Well, it all really started when we were crunching the numbers for your Homebuyer seminar, and we were looking at how much gets paid in rent. We were looking at how much wealth you can accumulate over, a very short period of time, and that spoke to me. I wanted to get in early before I started paying my landlord a whole lot of money, so that's what I did. I really committed myself to saving up enough money to I could put my down payment in, and did some research on the programs that I was interested in, and we went from there.
So I want to talk about the programs, but before we do that, so you had been renting with a couple of roommates from prior to that, right? Yeah. How long had you been renting a home?
I had been renting while I was in college. Right. I had an apartment for 2 years, and then I rented out a home with 3 of my friends for a full year.
Okay.
That was the first time I took the initiative to look for it on my own.
And so you split the rent with 2 other guys?
With 3 other guys.
With 3 other guys.
Correct.
Okay. And so there was something that I think happened by accident, but I think it would be important for our listeners to understand that you did something when it came to collecting the rent that was different than a lot of people don't even think of. I didn't even think to think of, right?
Yeah. So what I did was I took the initiative. I wanted to make sure that the rent was paid on time and it wasn't going to not get paid. So I collected all the rent from my roommates and I paid the landlord myself.
Now, did you collect cash or checks?
I collected, I just did it over Venmo, which is, like your Zelle, your Cash App and everything.
Okay.
I just made sure that they labeled it rent every time. And what we got into there was what's called border income.
So when you went to apply for a loan, your income working here didn't qualify you on your own.
Right. Not for the type of house that I wanted, certainly.
Right, which was in the range from what, like 230 to 250 or something?
Yeah, 230 to 250. I ended up buying it 245.
But you were scraping, like you.
I was scraping pennies together.
You were scraping pennies together to get it done, but you really wanted it done. But your income alone didn't qualify you, and then you went, well, what about all this income that I've been used to making as collecting rent from my roommates?
Right. So we looked at a lot of programs, and as fate would have it, the program that I went with allows for what's called border income, which is essentially if you have someone that's going to be living with you, you can evidence past payments from them.
How long do you have to evidence the past payments?
You have to average 12 months.
Okay, so that's really important that people are
important.
listening, that you have to have a 12-month history going into an account that's easily documented.
Exactly. Yeah. So We ended up documenting all my Venmo payments that I was receiving, and I had to show those going over into my bank statements over 12 years, or over 12 months.
Very good. And so then you could add that income, even though, did you have to evidence that they were going to be living with you in the new home?
I had to evidence, yeah. So I have one roommate right now, and I had to get a new lease stating he was going to live with me and how much he was going to be paying me, and I had to make sure it was broadly similar to what he was paying me prior.
Okay. Well, that's interesting. So then that actually got you to the point where he actually qualified for the loan.
Yeah,
okay?
that was a huge help.
And then when you were researching loans for first-time home buyers, you didn't have much money to put down.
No.
Right? So what type of programs did you find available for first-time home buyers?
Right. So the first-time home buyer program that I really took a liking to was it was called Home Ready by Fannie Mae. It's a conventional program, and it's 3% down. I liked that. I also was looking at the FHA at 3.5% down. But if you have favorable credit, the Fannie Mae program was spectacular because it had really, really competitive mortgage insurance rates. And it's 3% down. You can't argue with that.
Now, would the FHA program allow you to use border income or just
this Fannie Mae?
Just the Fannie Mae program.
Yeah.
So you want to make sure that if you're going to attempt to use border income, that you want to make sure your credit scores are higher, because Fannie Mae, which is a conventional loan, requires higher credit scores.
Exactly. Yeah, it's super important.
Okay, so then you discovered that you would fit into this program. What other limitations does that program have?
Right. So, as fate would have it, you don't actually need to be a first-time home buyer for Home Ready.
Okay.
That's actually not technically a qualification for it. One of the biggest limiting factors for it is that you need to be at or below 80% of the area median income.
Do you recall what that area?
It's about $54,000.
So you have to be lower than that.
You have to be at or below around $54,000, correct?
For annual income.
Annual income.
But that doesn't include your border income that you were bringing in.
That included my border income, actually.
Oh, it did?
Yeah. So, well, it wasn't a problem for me because my collective income was below that.
Not even close to that.
Not even close.
Not even close to that. So, but you didn't have any other debt, right? You paid your credit. You had a few credit cards. You paid them off on time. Yep. You kept zero balances on them. You didn't have any student loans that you had to concern yourself with. You paid cash. In my last segment, I talked about that I didn't buy cars for my kids. I made you buy your own cars. I matched your down payment, but you had to buy your own cars. Right?
Exactly.
So just confirm with my listening audience that was the case,
yes,
right?
Yeah.
It was absolutely the case for you and your sister.
Yes, we've been brought up to save money, so I'm super thankful for that.
Yep, and you did a great job of it. So right now we've got you researched, you found the right program, you fit into the category, you were able to use your border income, you were able to put 3% down on this house, and I think, did you negotiate some closing costs by the seller?
I did. So the seller wanted $40,000 for the house. I wanted $5,000 in seller concessions. So we negotiated up to.
You wanted how much for the house?
He wanted $240.
$240, not $40. $240.
$240. Sorry, and I negotiated $245 and $5,000 seller concessions. So
and it appraised.
It appraised for $250.
That's fantastic. So now I don't know if you've looked at what your home value is now, because that was about a year ago.
Yeah, it was a year in June. So I've looked now. We've got a handy dandy system called HomePot. And I put myself on that program, and they're saying the house is worth closer to $280 now.
Oh, good Lord! So you've made what, like $35,000 in 1 year?
$35,000 in equity.
Incredible. Listen, I appreciate you. I'd like to bring you back for another segment so you can talk a little bit more about that, help more of our young folks out there become homeowners. I want to thank Chase Woodburn for joining the show. We'll be back in 5 minutes. If you have any questions for me, I'm the Lone Ranger. You can call me at 407-706-3313. That's 407-706-3313. Or go to my website. It's easy to apply online at WeBringYouHome.com. That's WeBringYouHome.com. The Lone Ranger is here to help you and bring you lots of value on how we can help more first-time home buyers enter the market right now. Thank you so much, Chase. We'll be back in 5 minutes.
Thanks for having me.